Welcome to the China Automotive Systems second quarter 2025 conference call. At this time, all participants are in a listen-only mode. A question-and-answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star 0 on your telephone keypad. Please note this conference is being recorded. I will now turn the conference over to your host, Kevin Cease, Investor Relations. You may begin.
Thank you, everyone, for joining us today. Welcome to China Automotive Systems 2025 second quarter conference call. Joining us today are Mr. Jay Li, Chief Financial Officer of China Automotive Systems. He will be available to answer questions later in the conference call with the assistance of translation. Before we begin, I will remind all listeners that throughout this call, we may make statements that may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. Forward-looking statements represents the company's estimates and assumptions only as of the date of this call. As a result, the company's actual results could differ materially from those contained in the forward-looking statements due to a number of factors, including those described under the heading Risk Factors, Results of Operations in the company's Form 10-K annual report for the year ended December 31, 2024, as filed with the Securities and Exchange Commission, and in other documents filed by the company from time to time with the Securities and Exchange Commission. Any of these factors and other factors beyond our control could have an adverse effect on the overall business environment, cause uncertainties in the regions where we conduct business, cause our business to suffer in ways that we cannot predict, and materially and adversely impact our business, financial condition, and results of operations. A prolonged disruption or any unforeseen delay in our operations of the manufacturing, delivery, and assembly processes within any of our production facilities could result in the delays in shipments of products to our customers, increased costs, and reduced revenue. The company expressly disclaims any duty to provide updates to any forward-looking statements made in this call, whether as a result of new information, future events, or otherwise. On this call, I will provide a brief overview and summary of the second quarter 2025 results for the period ended June 30, 2025. Management will then conduct a question and answer session. The 2025 second quarter results are unaudited and are reported using U.S. GAAP accounting. For the purposes of our call today, I'll review the financial results in U.S. dollars. We will begin with a review of some of the quarterly business highlights, recent dynamics of the Chinese economy and automobile industry, and our market position. Our sales increased by 11.1% year over year to $176.2 million in the second quarter of 2025, compared to $158.6 million in the second quarter of 2024, an increase compared with $167.1 million in the first quarter of 2025. Total sales of electric power steering systems, EPS, increased by 31.1% year over year to $72.9 million as our sales mix continues to shift to higher technology products. Our Henglong KYB subsidiary achieved 26% year over year growth of its EPS products in the second quarter of 2025. Total EPS products were 41.2% of total sales for the 3 months ended June 30, 2025, versus 35.1% for the same quarter in 2024. Our steering subsidiary, Henglong, which produces traditional hydraulic steering systems for the Chinese passenger vehicle market, reported a 4.2% year-over-year sales increase to $83.4 million in the second quarter of 2025. Sales by Zhulong's commercial vehicle steering products increased by 25.6% year over year in the second quarter of 2025. Tax incentives, subsidiaries for scrapping older vehicles, and lower interest rate financing are among the government incentives to support the purchases of automobile vehicles in China for 2025. Additionally, local and private incentives may also aid buyers. North American sales increased by 14.9% year over year to $30.8 million, primarily due to higher sales to Stellantis. Our Brazilian sales increased by 49.4% year-over-year, mainly due to higher demand by Stellantis also. Brazilian sales represented 10.1% of total sales in the second quarter of 2025. Combined North and South American sales have risen to approximately 27.5% of total sales in the 2025 second quarter. For the macroeconomy, Chinese GDP was 5.2% year-over-year in the second quarter of 2025, a slight decrease from the 5.4% in the first quarter of 2025. As the passenger vehicle and commercial vehicle markets in China are our largest markets, their status can have direct impact on our sales. According to statistics from the China Association of Automobile Manufacturers, CAAM, total vehicle unit sales increased by 11.4% year-over-year in the first half of 2025. Passenger vehicle unit sales grew by 13% year-over-year, and commercial vehicle sales increased by 2.6% year-over-year in the first 6 months of 2025. Gross profit increased by 4.2% in the second quarter of 2025. Operating expenses were well controlled and declined by $2.2 million in the second quarter of 2025 compared with the 2024 second quarter. R&D expenses were stable at $8.1 million in the second quarter of 2025. We continue the development of our hydraulic and EPS products, especially our REPS product line. Income from operations rose by 20.2% to $13 million. Income tax expense was $4 million for the second quarter of 2025 as compared to $2.1 million for the 2024 second quarter. The increase in income tax is due to higher income before income tax expenses of $15.1 million and expected higher annual effective tax rate in 2025 based on the latest annual forecast as compared to 2024. Net income attributable to parent common shareholders per diluted share was 25 cents versus 24 cents in the year ago second quarter. Net cash provided by operating activities rose by almost $40 million year-over-year to $49.1 million for the first 6 months of 2025. Total cash equivalents, cash and short-term investments were $135.3 million, or approximately $4.48 per share at June 30, 2025. Our second generation IRCB has intelligent electro-hydraulic circulating ball power steering for use in heavy-duty vehicles that use both hydraulic power and electrical controls is now in mass production in China. Following the IRCB's outstanding performance and cost efficiency, new orders in July by customers set a new record in the power steering industry for the ramp-up to mass production. As China's first IRCB compatible system with the L2 Plus assisted driving. This system utilizes cutting-edge electro-hydraulic control technology to achieve internationally leading benchmarks in steering accuracy and response speed. By optimizing energy consumption, it is projected to reduce operational costs by nearly RMB 36,000 per vehicle annually. In our first 6 months of 2025, our REPS system steering product developed for Nanjing Iveco also entered mass production. It is capable of performing autonomous driving functions such as automatic parking, lane keep assist, lane follow assist, and also in the first 6 months of 2025, our Chassis Julong Power Steering Gears Company, Chassis Julong subsidiary, won customer awards and accolades from 2 major commercial vehicle OEMs, BK Photon Motor and Shanxi Automobile Heavy Trucks. Given our growing international sales, the board of directors and management has decided to begin the process to change our corporate registration from the state of Delaware to the Cayman Islands. We believe this change will save significant costs, require less regulatory reporting, and allow management to concentrate on improving operations, sales, and penetrating our growing international markets. The success of our R&D technology project has provided state-of-the-art steering products, our large, diverse product portfolio provides solutions for the largest vehicle global OEMs, provides the means to access more international markets to enhance our growth. Now, let me go over the financial results in the second quarter of 2025. Net sales increased by 11.1% year over year to $176.2 million, compared to $158.6 million in the second quarter of 2024. Excuse me. Net sales of traditional steering products and parts increased slightly year over year to $103.3 million in the second quarter of 2025. Net sales of EPS products rose 31.1% year over year to $72.9 million from $55.6 million for the same period in 2024. EPS product sales grew to 41.4% of the total net sales for the second quarter of 2025, compared to 35.1% for the same period in 2024. Subsidiary Julong sales of commercial vehicle steering systems rose by 25.6% to $23.5 million, compared with $18.7 million for the second quarter of 2024. Sales to North American customers increased by 11.8% to $30 million, compared to $26.8 million in the second quarter of 2024. North American sales increased primarily due to improved demand by one customer. Sales in Brazil were 49.4% higher in the second quarter of 2024 to $17.9 million from $12 million in the second quarter of 2024. Gross profit grew by 4.2% year over year to $30.5 million from $29.3 million in the second quarter of 2024. Gross profit margin decreased to 17.3% in the second quarter of 2025 from 18.5% in the second quarter of 2024. The decrease in gross profit margin was mainly due to an increase in tariffs and a product mix change from increased sales portion of relatively lower margin products. Gain on other sales was $0.5 million in the second quarter of 2025, compared to $1.7 million in the second quarter of 2024. Excuse me. Selling expenses at $4.5 million in the second quarter of 2025 were consistent with the second quarter of 2024. Selling expenses represented 2.6% of net sales in the second quarter of 2025, compared to 2.9% in the second quarter of 2024. General and administrative expenses, G&A, decreased to $5.4 million compared to $7.4 million in the second quarter of 2024, primarily due to decreased business taxes and surcharges. G&A expenses represented 3.1% of net sales in the second quarter of 2025, compared to 4.7% of net sales in the second quarter of 2024. Research and development expenses, R&D, were stable at $8.1 million in the second quarter of each year. R&D expenses represented 4.6% of net sales in the second quarter of 2025, compared to 5.2% in the second quarter of 2024. Research and development programs include, but are not limited to, electric power and hydraulic steering systems, automotive intelligence and software technologies, automotive electronics, high polymer materials, and manufacturing technologies. Other income was $1.1 million for the second quarter of 2025, compared to $1.7 million for the 3 months ended June 30, 2024. Income from operations rose by 20.2% to $13 million in the second quarter of 2025 from $10.8 million in the second quarter of 2024. The increase was primarily due to higher sales. Interest expense was $0.3 million in the second quarter of 2025, compared to $0.2 million in the second quarter of 2024. Net financial income was $1.3 million in the second quarter of 2025, compared to net financial expense of $0.7 million in the second quarter of 2024. The increase in net financial income was primarily due to an increase in the foreign exchange gain due to foreign exchange volatility. Income before income tax expenses and equity and earnings of affiliated companies was $15.1 million in the second quarter of 2025, compared to income before income tax expense and equity and earnings of affiliated companies of $11.7 million in the second quarter of 2024. The change in income before income tax expense and equity and earnings of affiliated companies was mainly due to higher income from operations in the second quarter of 2025 compared with last year's same quarter. Income tax expense was $4 million in the second quarter of 2025 compared to $2.1 million for the second quarter of 2024. The increase in income tax expense was primarily due to a higher income before income tax expenses and higher expected annual effective tax rate in 2025 based on the annual forecast as compared to 2024. Net income attributable to parent company's common shareholders was $7.6 million in the second quarter of 2025 compared to net income attributable to parent company's common shareholders of $7.1 million in the second quarter of 2024. Diluted earnings per share were 25 cents second quarter of 2025 compared to 24 cents in the second quarter of 2024. The weighted average number of diluted common shares outstanding was 30,170,702 in the second quarter of 2025 compared to 30,185,702 in the second quarter of 2024. 6 months of 2025, net sales increased by 15.2% year over year to $343 million in the first 6 months of 2025 compared to $298 million in the first 6 months of 2024, primarily due to increased sales of EPS systems. 6 months gross profit increased by 10.8% year over year to $59.1 million from $53.4 million in the corresponding period last year. 6 months gross profit margin was 17.2% compared with 17.9% in the first 6 months of 2024. Gain on other sales was $1.6 million in the first 6 months of 2025 compared to $2.2 million in the corresponding period last year. Income from operations increased by 5.7% year over year to $21.6 million in the first 6 months of 2025 from $20.5 million in the first 6 months of 2024. Net income attributable to parent company's common shareholders was $14.7 million in the first 6 months of 2025 compared to net income attributable to parent company's common shareholders of $15.4 million in the corresponding period in 2024. Diluted earnings per share in the first 6 months of 2025 were 49 cents compared to diluted earnings per share of 51 cents in the first 6 months of 2024. Balance sheet items. Cash equivalents, and short-term investments were $135.3 million, or approximately $4.48 per share as of June 30, 2025. Net working capital was $170.9 million. Total accounts receivable, including notes receivable, were $294.2 million. Accounts payable, including notes payable, were $269.6 million, and short-term loans were $71.9 million. Total parent company stockholders' equity was $366.4 million as of June 30, 2024, compared to $349.6 million as of December 31, 2024. Additionally, net cash provided by operating activities of $49.1 million in the first 6 months of 2024. We invested $18.5 million in the capital expenditures in the first half of 2025 as we continue to invest in our R&D and production capabilities. The business outlook. Management has raised revenue guidance for the full fiscal year 2025 to $720 million. This target is based on the company's current views on operating and market conditions, which are subject to change. With that, operator, we are ready to begin the Q&A.
Certainly. At this time, we will be conducting a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions. Your first question for today is from Jonathan Neves, an individual investor.
Hello. My question is, why has the income tax rate increased in 2025?
这是我们的一个投资人的问题啊，为什么我们这个税收增加了？在2025年的税收就是第二季度的税收增加了，比去年同期啊。第一个呢，就是这个税前利润的增长。第二块呢，就是说我们的有效税率稍微提升了一些。在去年的时候呢，我们有大概差不多150万美金的一个税务调整。因此，今年我们在这个研发费用的加计扣除上面的时候就更加保守了一些。去年采用的加计扣除的比例是100%，今年呢是用了40%。由于抵扣的少了，所以说这个有效税率也提升了。所以说综合这两个原因导致今年的这个税收增加了。Okay. So there's the increase of the tax is due to two factors. One is pre-tax profit before tax has gone up as the overall revenue and it has increased. And the other reason is the tax rate has slightly ticked up. And last year there was a 1.5 million tax adjustment, and which affected last year's tax provision, and this year has a different effect, and that's overall affecting the total tax provision.
Your next question for today is from Michael Fitter, an individual investor.
Good morning. I have a question about R&D. It's in the 2025 second quarter, why was R&D flat at $8.1 million, and what's the outlook for R&D spending?
这是另外一个问题啊，就是关于我们的科研费用。第二季度2025年的这个为什么我们的科研费用相对810万美元相对比较去年是持平的这么一个状态，想知道一下什么原因，然后今年下半年的情况怎么样？能不能介绍一下就是科研费用？我们今年的销售收入呢，在这个季度增长了11%，但是这个研发费用呢，基本上跟去年的二季是个持平的状态。最主要原因呢，是属于我们这个在一季度这一块的研发费用的话呢，增长的比较多。很多一些研发费用呢，可能有一些已经在一季度已经列支了。你像我们在今年的一季度研发费用比去年的同期增加了一个340万美金，增长比例达到64%。所以说第二季度呢就稍微减少了一些，但是整个上半年的话呢总体算下来1680万美金，比去年的1350万美金还是增长了一个24%这样一个水平。好 ，Okay. So Q2, yeah, you're right. In the second quarter, our revenue has increased. As you can see, revenue increased by 11%, but R&D during the same quarter was relatively flat. The reason being, during the first quarter, we actually was R&D expenses that was a little bit overspent. It increased on the year-over-year basis. During the first quarter was increased by $3.4 million. That's about 64% year-over-year increase. That's part of the reason we didn't have to increase as much during the second quarter. On the first half perspective, first half the R&D expenses about 16.8 million versus last year same period 13.5 million. So
that R&D expense will continue to invest in the future technology, whether it's driverless technology or the different type of steering product going to electric vehicle. So we're very committed to long-term investment into R&D.
对，全年的话呢，差不多我们预测在3200万美金到3500万美金之间这样一个水平，大约占销售收入的一个5%。那么其中呢，80%的这个 R&D 的研发费用呢，都用在这个EV 相关产品的这个方面。这个比方就是像刚才说的 REPS、I、2CB、ERCB、SPW 等产品。对。
Yeah, on a full year basis, we're expecting $32 to $35 million dollars on the R&D expenses. That's about 5% of total revenue. 80% of R&D expenses is going to EV related product, the steering product for the EV sector, including REPS and all different kind of product, and our customers are sending orders. So overall R&D is on track.
Okay. I have a follow-up question, which is, given the strong electric vehicles in China, how much of the current R&D spending is for new energy technologies? And for which products are these new energy technologies for?
Okay. 他说中国现在的这个电动车的势头非常猛啊，就是想知道我们在科研费用里面有多少是用在这个新能源的这个领域。
对，我们现在差不多80%以上的 R&D 费用都用在 EV 相关的产品上面了。
Okay. So 80% of our R&D expenditures are going to the EV. As you know, in China right now, every 2 cars sold in the market, one of every 2 cars is EV. So the EV penetration is very large, and they will most likely remain at this level, if not increasing. And so that's why our product portfolio had to also need to be adjusted to meet the demand.
Thank you.
Thank you.
Your next question for today is from Gary Nash, a private investor.
Well, good morning. Thank you for taking my question. With sales in Brazil rising by almost 50% in the second quarter, what is the capacity utilization and need for more capital investment?
我们的销售增长在巴西增长了将近50%。他想知道我们的这个产能利用率是多少，然后这个需要多少的资本性支出未来。
目前的话呢，我们巴西有3条产线，产能利用率的话呢，已经达到了90%。我们在前不久的时候呢，对一些瓶颈这一块呢，这个 bottleneck 这一块的话呢，一些工序做了一些提升。但是的话呢，从这个明年的订单来看的话呢，可能我们还需要继续投入。我们预计在今年的4季度啊，可能会再上一条这个 EPS 产线，总共在那边达到4条线。预计新增的投入的话，估计在350万美金这样一个水平。
Okay. Yes. We're very pleased and very proud of our growth in the market Brazil. It's not only growing at a very rapid pace, like a 50% year over year, but also now it's becoming it's crossed the threshold of 10% of total revenue of our overall company. So it's very exciting about the Brazilian market. In terms of your question on capacity utilization, we right now runs on 3 production lines in Brazil facility, and the utilization is about 90%. We have experienced a bit of a bottleneck on the production process, and that's being solved. And so, and in addition to that, we are going to add another production line. So sometime by the end of this year, we'll have 4 production lines. The new line is EPS product, electric power steering product. So we're going to have 4 production lines in Brazil alone. Total capex, as you asked, will be around $3.5 million.
Thank you.
Thank you.
Thank you.
Once again, if you would like to ask a question, please press star 1. Your next question is from Kevin Cease. Kevin, your line is live.
Thank you. I had a question from a investor, and he wanted to know a comment, please, that the company's buying back shares and then issuing options to the management, and he'd like to get some clarification on that.
So first, this question that you received on the email?
You know, it was a conversation that he had with me.
Okay. So his question is that the company has been buying back shares and also issues options to management team.
Yeah, that's right.
Okay. All right. Go ahead, Kevin.
I said he would just like to have a comment from management.
Okay. 你觉得这是一个投资人的问题啊？他跟Kevin 通过电话，但今天没有上线。他的问题是说，他想知道，你能怎么解释，这边公司在回购股票，同时又发期权给这个管理团队，这个怎么看这个操作？
回购股票呢，主要原因就是因为我们认为这个目前的股价的话呢，还是比较低估的啊，比较偏低这一块。然后通过回购的话呢，把这个一些这个富裕的现金的话呢，回馈一部分给股民，这样的话呢，相当于更支持这个提升一下这个公司的这个形象。然后给管理层发股票期权的原因呢，就是需要对他们进行更多的激励，让他们这个长期的利益的话跟公司捆绑在一起，相当于一个金手铐。这样的话呢，这个我们吸引更好的人才，然后这个让他们有更强的这个动力来为公司更好的服务。
Okay, so to answer this question, yeah, it's a very very good answer. Here's the answer for the question. The company buy back shares because companies see the stock is undervalued or grossly undervalued, and they want to utilize the cash on the book to create some shareholder value. And it's part of shareholder return program, like any other companies. When you see the stock is price is dip below intrinsic value, you buy the stock. Now, on the stock option plan to issue to give to management team, it's part of the incentive plan to incentivize middle operational management or even senior management to continue to execute the game plan to support the company's long-term growth, including a number of strategic initiatives from R&D to partnerships. And so these are critical tools for key employee, and also attract talent to join the company. So this is no difference. This practice doing in CES is no difference from other things happening with Google, Microsoft, Amazon. It's exactly the same thing. The U.S. companies are incentivizing their employee and attracting talent, and at the same time, they're using their strong cash flow, free cash flow, to buy back shares.
Okay, thank you.
As a reminder, if you would like to ask a question, please press star 1.
Okay, so I have another question then. Can you discuss the move to the Cayman Islands and what advantages you see to the company and also to the shareholders from this move?
你觉得这个问题是讲这个，因为他们也看到了，也有股东看到了这个公司的上报文件，就是这个就Cayman Island 这个上报文件，想知道这个是策略是什么原因啊？这个有什么想法？
最主要的想法呢，是可以减少上市公司的一些这个合规成本啊、上市维护费用啊、一些运营成本这一块。包括像作为一家外国公司的话呢，像我们这种小规模的，就像很多其他一家外国公司一样，可以这个在 Q1、Q3 的时候呢，可以减少一些这个披露的一些这些负担。那么另外一个考量呢，就是在开展国际业务的时候呢，可以有更多的灵活性啊。作为一家这个开曼的公司，主要这个是从这个公司的这一块来考量的。那么对股东而言的话呢，我们初步判断基本上没什么影响。公司的股票的话呢，仍然在纳斯达克交易代码呢还是 CAS 不变。那么股东的分红啊、资本利得啊等税率的话呢，也基本维持不变，所以说对股东来说没有影响，好吧
Okay, good. Yes, this is a very good question we received from a few shareholders regarding the redomicile to Cayman Island. This move is mainly for the purpose of reducing the overall cost of being listed company. As you know, right now, since that we are a U.S. company, a U.S. company, we had to do a quarterly filing 10Qs and annual report on 10Ks. So there are tremendous amount of saving if we move into this new structure. We're still reporting, but the overall cost of reporting is a lot lower as a foreign company. And we are most of our operation is outside of U.S. anyway. That's one. And two is even this move domicile to Cayman doesn't change the main things. We are still listed on NASDAQ. The stock ticker is still under CAAS, and our other shareholder reward program, whether it's dividend or share buyback, will continue. So in terms of shareholders, there won't be any effect due to this change. And one more thing is being a Cayman company and no longer a U.S. company give us business flexibility as you can see, our business is now expanding globally. We already have a pretty good global footprint. Let me remind everybody on the call. We started off 30 odd years ago as a regional power steering company in China. We quickly grew into a national champion, and by supporting and supplying to the fast-rising domestic brands. So now you see all the brands in the news, whether it's Cherry Auto, BYD, Geely, Great Wall, a number of those auto makers are very large automakers by global standard now. They're all our major customers, and they start up the first sets of power steering with us. So we're very proud of that. And then from there, about 18 years ago, we launched into we expand our footprint into U.S. market, and so now you have formerly known as Chrysler and Ford, and our major customers. And we have a quite large shares with these two companies in a number of products, and then our European businesses start taking off. So our relationship with the Fiat has deepened over the last 15 years, and now we are supplying to a number of European automakers, auto models. We're growing very fast in terms of our market share. And then lastly, we just mentioned earlier, our Brazilian business are growing very rapidly. So this quarter is 50%, and we're expanding more capacity. So overall, we are a global company now, and we will continue to expand our footprint. So that being said, being a foreign domicile company or non-U.S. domicile company will give us a business flexibility to continue to win contracts and expand business and grow market share. And lastly, to build shareholder value.
We have reached the end of the question and answer session, and I will now turn the call over to Kevin Thies for closing remarks.
I want to thank everyone for participating in today's conference call. We wish you all to be safe, and we look forward to speaking with you in the future. Thank you.
This concludes today's conference, and you may disconnect your lines at this time. Thank you for your participation.